This one on? There we go. Hey everybody, welcome to PubKey. We got a we got a Thursday on a Tuesday. Woo. All right, how's everybody doing? Woo. Okay. So we have a very special guest tonight. Nik Bhatia is in town, out with his new book, The Bitcoin Age. Layered money has been on my short list for a very long time. When people want to talk about Bitcoin, friends and family, it's just like, I'm going to give you a couple of books. Go through these, and then we'll address your questions as they come. Highly recommend Layer Money. I have not read The Bitcoin Age yet. I'm going to get my copy tonight, so I'm very excited that Nik is here. Economics professor at USC Marshall School of Business, and all the way in from LA. Everybody give a warm round of applause and welcome for Nik Bhatia.
Thank you, Thomas. Thank you guys so much for joining me tonight. I have been writing about Bitcoin since 2018. And when I was on the trading desk during that time, I'm into it. Just keep the old school coming. So when I was on the desk and I was trading US Treasuries, trying to find what my role would be in a Bitcoin world, because I had already discovered Bitcoin, and I was like, okay, I know I'm going to have to shift my life out of the bond market into Bitcoin because that's where my interest is. And so I have to follow that. But I had a stable job, a newborn at the time. And so the shift into the Bitcoin industry had to be something that I could really add value. I didn't want to just go work at a Bitcoin company. I looked at the listings. Nothing really fit what I wanted to do. I was a bond trader, so what was my role going to be in Bitcoin? So at some point, I realized that I should be sharing my ideas about why Bitcoin from the perspective of a bond trader. So when I was writing Layered Money, or when I was coming up with the idea for Layered Money, or what was going to be my book about Bitcoin, the title was, I remember this, it was Bitcoin Through the Lens of a Bond Trader. That was the title that I was going to go with. And I think my whole career since then has been in that lens. Bitcoin through the lens of a bond trader. So that's what I am. I'm a US Treasuries trader, and I'm a rates analyst. And above all, before I became a bond trader, what have I always been? I've always been a price analyst. That is my number one technical skill. And people out there might not even consider price analysis itself a skill. But I do, and I come from a world where it is considered useful and a skill and a trade and even an art. And through price analysis, I was attracted to Bitcoin. And then when you get attracted to Bitcoin, then you go down the Bitcoin rabbit hole. And I had actually already done my Federal Reserve and monetary system rabbit hole prior to discovering Bitcoin. So I had a lot of background. My Bitcoin rabbit hole was the software and what a Bitcoin blockchain does. So that process for me allowed me to discover Bitcoin truly, and then it has led to something really, really exciting, which is me being able to just write and teach. And yes, by the way, during that, what was I going to do? USC my alma mater, popped back into my life through a friend and got me to start guest lecturing there. And then I ended up being offered the position to teach the bond class at USC, grandfathered from the bond professor there at the time. And so that was 2019, and that was the trigger to resign from the desk and just follow my heart and go into Bitcoin. So that's a little bit about my background. I published Layered Money in 2021. I then started the Bitcoin Layer, which is a Bitcoin and global macro research firm. We do everything from education through the YouTube channel and just me trying to teach Bitcoin and rates, Bitcoin and macro. Whatever I know, I'm trying to teach it. And then with the newsletter, we're trying to put out a very elite research product for people that are into investing and quantitative analysis and the numbers behind Bitcoin and interest rates and global macro. So that was about 9 months after publishing Layered Money. The name, the Bitcoin Layer, it comes from the book Layered Money, and I wanted to explore the Bitcoin layer of Layered Money on a more permanent basis. So my vision is to be teaching people about Bitcoin as it goes from where it was in 2021 when we started to $1 million and maybe beyond. We'll see how long the runway is for that type of research and education. And then within days of publishing Layered Money, the first readers read it and then they asked me, okay, so should I be investing in Bitcoin and how should I be thinking about it? And I thought, oh, I just wrote a book about Bitcoin, but I realized that it wasn't. It was a book about money, which I'm very proud of, but then I wanted to write a book about Bitcoin. So that's what Bitcoin Age is. Unfortunately for Thomas, the book is called Bitcoin Age. There's a book called The Bitcoin Age by a gentleman named Adam. I haven't read it. But we came out with the book at a very similar time. So the book is called Bitcoin Age, not The Bitcoin Age. But what I would love to do tonight is to answer your questions and about either book or about anything going on today in the world of Bitcoin and global macro. And I have about 30-something books left for sale, signed copies at the end of the night if you guys are interested. And I need to put one aside for Thomas so that I don't sell his book. So this is the Thomas copy. Okay, so I would love to hand it over to you guys and see what you guys are interested in talking about tonight.
It's more just for the stream.
It's for the internet.
Yeah. Yeah, it's just for the stream. Sorry.
Just a basic question. What would you say one needs to know before reading the book? I haven't read it yet, but I would love to. But sort of a sequence of education. What is the required knowledge or like helpful knowledge?
Sure. So to read each book, I believe you just need to be curious. I really did try to write each book without having a prerequisite set of knowledge. These are books for beginners. Layered Money is where to start because we do have to think about what is money. I was just having this conversation today. The word cryptocurrency is a disservice to Bitcoin because it associates Bitcoin too quickly with currency. It is not first and foremost a currency. That is a descriptor for it. It's actually a commodity first. And so instead of exploring what is currency and is Bitcoin a currency, let's first ask what is money, what is gold, and what is the dollar? Those are very basic questions that we have to ask at the beginning. layered money answers that question, and it gives you an order. It's layered money is because of the hierarchy of money. And hierarchy means ranking or order. So you have dollars in your wallet, you have cards, you have investments, you have a deposit account, you can write checks. These are all forms of money, but they have an order to them. They don't just exist side by side in a basket. They have a ranking based on balance sheet. That is a framework for money that is, when I read about it, I didn't create hierarchy of money. I read about this concept from Professor Perry Merling, an economics professor, and he's got a great course on Coursera too, if you're interested in banking and how that whole world works. But layered money is a way to describe this hierarchy and to really illustrate money. Bitcoin age, if you are interested in what is Bitcoin and where did Bitcoin come from, part of that story is what is the dollar, but it's a little bit less about what is money. This is a deep dive into the origins of Bitcoin, and I tell stories in Bitcoin age about the foundation of the internet and of private sector use of cryptography, which are so fascinating to anybody that's interested in Bitcoin, knowing where these things came from. It's a really fun journey through the world of the internet and cryptography. So that's a little bit about each book and what they are designed to do. Thank you.
Hi. I have a question. Since you have some knowledge about bonds, I was hoping that you can explain the new MicroStrategy bond, STRC or something like that, and why that is the new infinity money glitch, what he says, compared to the old boring strategy of the bonds.
STRC is part of Strategy's capital structure. They have built different vehicles on their liability side that offer different structured returns. Some have full upside and no fixed component. Some have a hybrid and some only have a fixed component. And in this way, they're able to basically layer their exposure. And STRC specifically is a vehicle that essentially has no downside exposure, right? Every bond has default risk. So that's not what I'm saying, but it doesn't have price downside risk. And it has a fixed component that's far outstripping any money market vehicle. So in that way, they've created an instrument that feels too good to be true to someone investing in a money market. Now, I'm not here to argue whether it is or it isn't, but what I can tell you is that money markets have about $7 trillion of assets under management. STRC is barely getting started. So we'll see over the next 6 to 24 months the type of momentum of this specific type of vehicle. That would be my answer for you.
Thanks.
Follow-up question to that is, if 9% is the new risk-free rate, what does that do to CAPM?
Again, it is in the proof of the pudding. It's not, 9% is not, just because STRC is issuing a vehicle that has, overnight liquidity at 9%, just because they're doing that doesn't mean that the discount rate across the capital market goes to 9%.
We could say the same thing about the Treasury rate.
But the Treasury rate is the time value of money that people are using to discount their cash flows.
If it was fixed, that would be fine, but it keeps getting printed. So
But the
time keeps changing.
But the interest rate used to discount cash flows always changes. It changes every moment of the day. And in the present value calculation of future cash flows, it also fluctuates at every moment of every day. And so that rate that is used to discount is not automatically going to 9% because you have some vehicle. People might invest accordingly, right? And that's the market. But just because they have something at 9% doesn't mean that the 7 trillion just starts going straight into STRC. I mean, that's just not how capital markets work. Now, I'm not trying to doubt their ability to raise capital. That's the interesting thing, and as an analyst, that's what I'll watch, is how quickly does it attract capital. And then we can see. And then if it is at a pace that's obscene, actually the market will adjust in that you sell the treasuries to buy the other thing, and the interest rates of everything else will go up and meet somewhere in the middle, and that's arbitrage. So arbitrage is the force. So 9 and 4 are the two numbers right now, and how quickly does it collapse? Well, you know, if you zoom in, treasury rates have been going down for the last few weeks. So, but I wouldn't use that as any proof that something is happening between treasuries and STRC. It doesn't have the size yet, and we'll just have to wait and see. Fascinating, though.
I couldn't be more ignorant on all of this, so forgive me. I got lucky in a GPTC trade when it was at a discount. That's it. That's all I know. How is there no downside risk in this STRC? I don't have a clue.
It's just in the contracts. Every bond has a prospectus. What are the cash flows? So, if you buy a bond, let's say not STRC, but if you buy a bond from Apple, the bond will say, this certificate promises to pay you 5.75% for the next 5 years, and then the principal at the end of the term. So that bond has promised no downside risk over a 5-year term. But if you want to sell that bond in 3 weeks and rates have gone up, you're going to sell that bond at 99 or 98. You're going to lose money on that Apple bond. STRC in the contract is going to say you can mature tomorrow at par every day. Yes. So it's like your money market vehicle has no downside risk in that you can never go from 100 to 99 on your money because it always matures tomorrow. So you have 100 today and you have 100 tomorrow plus a small tail, which is your overnight interest. You don't have to wait a year to collect 4% on your money market fund. You collect 4% divided by 365 once per day. And so you always get 100 tomorrow. So STRC in the contract is written like that. That's how it works.
So in your example, using Apple, so in STRC, it's MicroStrategy that's behind this.
Correct. They're the issuer.
So as long as they're good to go, you get there's
That's
no downside
correct.
risk. Okay.
That's correct. Right. The risk is that MicroStrategy doesn't pay you tomorrow.
Gotcha. All
But
right, thank you.
the contract is written that you get par tomorrow, like any money market fund contract.
Thank you.
Yeah.
Thank you.
Sorry? I'm not even saying this because I can't offer investment advice. I legitimately know nothing about strategies, capital structure, and I'm not an analyst on strategy, so I definitely can't even opine on is one vehicle, is the whole thing sound? Which part of the capital structure would I own? I don't own any part of it. I'm one of those people that doesn't own any MSTR. It's not my field of study, so I couldn't tell you conceptually. Because to do that, I would have to understand corporate balance sheet mechanics between debt and equity, and that's not my field of study. Thank you.
You just said you weren't going to give investment advice, so maybe, should have got the mic, but I'm a financial planner. And the more I look at the world, the more I think maybe I should start thinking about allocating some of my clients' money, maybe like 5%, to Bitcoin and crypto in general, just before we're left on the backtrack as this progresses. So do you think that's like a smart assumption to maybe have a small allocation towards it?
It should be Bitcoin only.
Why do you say that?
The books will get, I mean, really.
You just made a sale.
There is only one decentralized digital commodity. It's Bitcoin. The reasons for that are plentiful, but there is only one, by many people's definition, but definitely by mine. Yes, it's a wise thing to have your clients in Bitcoin. This is unquestionable now, looking at any medium time horizon. The returns are undeniable. The growth in this asset and its prominence in the world are undeniable. And every portfolio needs to be considering Bitcoin and measuring how much you need to be in this asset class versus the rest. It cannot be zero anymore, is really the way that I would be thinking about, and I hear that that's the way you're thinking about it, cannot be zero. So a buddy of mine over golf just casually asked me, like, he's like, how much of my 401k should I just sell the stocks and put into Bitcoin? And I told him a number much higher than 5. But it was less than 50, and it was said because, like, he's an attorney, he earns well. I know he probably has I don't know how much he has in his portfolio, but he has a portfolio that you wouldn't want to just invest $10,000 in Bitcoin. I mean, if I were him, that would be like too small if I was this attorney at 40 years old. And so it can't be zero, and I don't know if it's 5 or how much higher, because that's, you're the fiduciary, right? You have to determine per the individual client what is appropriate for them. And so what that number is, you'll have to decide with your client, but it can be very high for young people if you can identify what the commodity means for the world and why it matters for the long term, not thinking about it as a trade, because it really is a different asset class. Thank you.
Hi. Do you think the petrodollar system and Bitcoin can coexist long term? Or do you think, like, for one to succeed, the other kind of has to fail?
Very good question, yeah. The petrodollar system itself might already be breaking down a little bit in the grand scheme of things. I believe the longevity of the dollar is firming up over the last several years. And so I think there will be a divergence in the strength of the dollar system with the level of DXY with the petrodollar system, meaning that those three can be independent of each other. That what I believe is over the next 10 years, the dollar system gets a little stronger versus other fiat currencies. That the petrodollar system, in that the exchange for dollars abroad for oil, and then the oil dollars that are raised by oil selling nations being recycled back into treasuries, which is petrodollar recycling, which is actually the system. Petrodollar is really meaning petrodollar recycling. That was the deal in the 70s when the US went to Saudi, and the agencies did as well, Fannie and Freddie. petrodollar recycling might be slowing down. The dollar system itself might be getting a little stronger, and DXY might be getting a little weaker over the coming years. Those would be my base expectations. And I think Bitcoin can do very well in a world with less of a petrodollar recycling, because that money then will go at the margin into Bitcoin, some of it, and you'll have a Bitcoin Bitcoin system. You kind of already do, in that Bitcoin uses energy. So DXY might go weaker because of policy. We look at the chart. That's what we see this year, and that can be very good for the dollar system's longevity. It can be great for the nation as well. And Bitcoin is already doing very well in that environment. That is the environment. So Bitcoin is doing very well in that environment, and I believe it can continue.
Okay, thank you.
And yeah, and I know that might not be exactly the answer you were looking for, but we have to separate it into many different components.
Yeah, I mean, I'm not looking for any particular answer. I mean, it's in the incentive of any government to control their fiat currency, and it's obviously in the incentive of U.S. government to have this dollar system. So, but I think maybe they can coexist in a way like, I guess similar to gold. You know, Bitcoin is not replacing the dollar, but it can exist in a way that it's incentivized for the government to have some as well, but not so much that it's replacing the dollar.
I totally agree with that, 100%, and that is part of the thesis of this book, that the two will coexist.
I haven't read your book yet, to confess, but yeah.
It's what you described, the coexistence, is part of the thesis of my second book. Absolutely.
You just pass it over here. Yeah, one over here.
I was just going to ask, coexist for how long?
That's the question that fascinates me a lot, and so I've been reading a lot of world history to see how long an empire can last and why, and where it can lose empire status and have its currency evaporate. So that's where my interest is, and I think it can be very long before the world isn't using the dollar. See, because what Bitcoin Age talks about is that the dollar system's success is that it is a credit system. And our human nature is to build credit relationships. And that much I am definitely landing on as I read post-Bitcoin Age. All my reading is now history. And so I'm looking for examples of, is it credit? Or is it a commodity that is money? And the answer is definitely a little bit of both, in that you see many examples of trade not needing money because you have relationships, which is credit. You can call it credit, but really it's just relationships. And those relationships, they don't need they almost don't even need any money. They don't need Bitcoin. And they don't need gold. Nobody ships gold to each other anymore. And why is that? Because you don't need it. And if you don't need gold, why would you even need Bitcoin? So that's why I'm trying to challenge myself into, why would you need it? Well, there is a segment of the population that needs it, and that those two countries that trade with each other, that have a relationship, they should have something neutral in between them. and it used to be gold for a long time. Why has the global economy done what it has since the fall of the gold exchange standard in 1971? Because we might not need it at all. So I think a very long time, because the dollar credit system is what allows those debt relationships to persist, because banks are the ones that facilitate it. They facilitate everything. So every deal is through the bank, because they can allow some money to go here or there when it's needed and where it's needed, because they can create it. That creation of money to let people have relationships with each other and keep it going at very high volume, high speed, high velocity, all around the world in 190 countries, that is a function of the dollar credit system and nothing else. It's not a function of gold, definitely has nothing to do with Bitcoin, and it has very little to do with the United States now. That's part of what the book Bitcoin Age is about. That dollar, I call it the global dollar, global banking dollar. That global banking dollar has a very long life ahead, because there is no challenger to it, and Bitcoin is not a challenger to it. So its success is concurrent with it. Bitcoin's success is concurrent with the rise and the strengthening of the global banking dollar. So in that way, perhaps Bitcoin's success is predicated off of the continuation of it. So those are some of the things that I'm thinking about. It's a good question. It's one that everyone has.
I have a follow-up question to that. What's your view on BRICS in terms of when they do need to settle because they don't have enough trust? And how do you think that's going to play out? And do you think they'll eventually decide to move away from BRICS and go to a Bitcoin standard?
A lot of the BRIC stuff is facade, because the exposure is swapped into USD or other assets behind the scene at HSBC and Barclays and BNP Paribas, Deutsche Bank. I think the BRICS is a mirage, but the relationships, the trade relationships are real, like China and Russia and their relationship, and the fact that they don't need dollars or US banks to transact, but yeah, the safe account in China, they buy a lot of US bonds. And they have a lot of, they face every bank down here, the street. That's a good question. The breakdown of trust in the system gives rise to Bitcoin. So I'm not saying that there's too much or that the trust isn't going away. That's definitely not what I'm saying. Actually, Bitcoin's success is a proof of the breakdown of that trust, that individuals and institutions feel that they need something else as a hedge. Bitcoin is a hedge to that system. So Bitcoin becomes a little bit of a referendum on the system. And in that way, I believe the two coexist. So maybe, does that answer? Bitcoin is not a challenge to the credit system denominated in dollars because Bitcoin cannot be created by banks. That's what I mean by that statement. Bitcoin is a challenge to every dollar-based asset in the world, both physical assets, which I include equity, because if you think about your stock certificate and you kill the dollar tomorrow, the certificate is still worth something because the company still has products and services that they can sell to the rest of the world. Whatever the rest of the world is willing to pay is the revenues of the company and what you are due in part as the shareholder. So I include equity and real estate. Real estate is priced in dollars, so that doesn't mean it's dollar-based. It's just an asset that's priced in dollars. Every dollar-based asset, every dollar-priced asset, and then every dollar-based asset, which is deposits, money market funds, every single bond in the world is a dollar asset that's just a promise to pay dollars in the future. All of those assets are challenged by the existence of Bitcoin, and that Bitcoin eats the world in that way. So it's not a challenge to the credit system because banks cannot create Bitcoin to facilitate trade relationships. That's how banking works. So Bitcoin cannot do that. A bank can't create Bitcoin and let their client send it to another client because that other client will get the transaction and be like, you didn't send me Bitcoin. So banks cannot do that. So the dollar system is a credit system. And Bitcoin does not challenge that because it can't do it. But it challenges every dollar invested in assets that are either priced in dollars or a promise to pay dollars.
Hey, Nick. I got a two-parter. Nice J's, by the way. So I feel like last summer there was a whole like Japan, they're raising interest rates. This whole carry trade is gonna come to an end. The markets crash a little bit. Can you, I don't know if that's a little bit too basic, but can you break down like how that ultimately affected the U.S. Treasuries and then ultimately Bitcoin, and then now with the U.S. set to lower the interest rates in Q4 potentially, like what does that all mean? Like how they're all intertwined. And then secondly, a little bit of a pivot, but just curious, like from your USC like classes, like what is the overall sentiment of Gen Z and how they're receiving your lectures and books and information? Like on one hand, it seems to be like complete despair and just all loss of hope of like actually a functioning like civilization for this generation, but then and they're doing like meme coins and Doge and all this like bullshit, but at the same time, you know, just natively like digital natives, they're just like up on like what is actually going to be the most efficient and like pivotal like going forward for society. So just curious what you're seeing on the front lines there.
Sure. Probably be really quick on the Japan thing because it's super, there's so many moving parts.
Okay, yeah.
Okay. The carry trade is basically borrowing in yen because yen have low interest rates. So you borrow in a low interest rate and you go and invest in something else. So as Japanese interest rates rise, the borrow that you pay gets more expensive. And you don't get a fixed loan. You basically have to roll your loan every month or every 3 months in the FX market. And so when you go to roll every 3 months and it gets more and more and more expensive, your trade that you currently have on stops becoming profitable and you have to sell the asset that you were long from the borrow. So the Japanese yen carry trade is a long-standing investment, and whenever interest rates go up in Japan, it threatens all sorts of assets. I won't really get into like how it affects, you know, U.S. interest rates or the U.S. bond market today. Japan holds a lot of U.S. treasuries, so that's one issue. So as the Japanese yen goes down in that it gets weaker, the MOF, which is the Japanese Treasury Department, it's not part of the central bank, they sell U.S. treasuries to defend the currency, basically buy back yen and stop the fall of the yen. So that's a factor, but I don't think that it's a material factor. Nah, I really don't think so. Yeah. USC. So what year does Gen Z start and stop at? I'm curious because I don't actually know, but I teach 95, so 20 years, so 30 years old is the oldest Gen Z? Okay. So and then basically today's teenagers are also Gen Z. The older teens are 15 and up? Okay. So I have had the chance, I've been teaching for 7 years. I've been teaching Bitcoin for 3 years at university. I've taught grad school, undergrad, and most recently this summer, I taught high school students at USC in a summer program. It's a college class that they had me teach, though. So I've taught a pretty wide range of ages. I haven't enjoyed that much teaching undergrads over the last few years. I love teaching the grads rates and bonds because they're ready for it and they're ready for the what is money and they get really into it. They're curious about Bitcoin, but we don't talk about it too much. I do right by the university in that for my fixed income course, I teach fixed income. I try not to teach Bitcoin because that's not what I'm there for. They gave me a Bitcoin class. I get to teach Bitcoin. I taught Bitcoin to undergrads and grads. And some of them got it. A couple of them loved it. Like I got an email from one of the grad students. I only taught Bitcoin to the grads once. And one guy emailed me and he said that I changed his life with the course. And so it happens, but I tell you all of this to tell you that teaching the 15 and the 16-year-olds this summer was incredibly rewarding. All of them got Bitcoin almost immediately, like 4 days into the course. And I did the first 2 days on basically I taught layered money for 2 days. That was 10 hours. So I taught them layered money for 10 hours. And then I taught them the Bitcoin chain of blocks for the next 15 hours. And all of them got it. And they all told me at the end of the class that their favorite lecture was layered money. So Bitcoin was obvious to them after I explained it to them, but it wasn't the aha moment. The aha moment was what is money and that the dollar system is a scam. So it is a scam if you understand layered money. And they could see it. So, and we taught AI because the university asked me to, like roll it into the course. And so I had a lot of fun doing that. And I was very impressed. They're very quiet in that they don't raise their hand as much. I think, I don't know like what, but when we were 3 days in, I wanted to just, with chat, you can't do anything anymore. You can't like give them assignments because everyone will cheat. They all admitted it to me because the course on AI, I said, how many of you guys cheat on your exams? Like, I mean, not exams, papers. And everyone raised their hand. And they're like, I use chat to write my papers and this and that. So I don't do that anymore. It's a waste of my time, a waste of their time too. So I make them stand up and talk for 60 seconds in front of everyone so that I can see that you can know how to think. And the people that read the thing, they get the worst grade. Because I asked you not to read. You can come up with notes and just go like this, and you can get a perfect score doing that. So after the third day, and we went around 60 seconds, I was like, wow. So smart, so impressive. So I think a bright future. Demographics were about 3/4 Californians and 1/4 Chinese from China. Sorry?
Hey, Nick. Since 2024, with the approval of the ETFs and a lot of the Bitcoin treasuries that have popped up in 2024 and 2025, a lot of the information on YouTube or X, where you have keynote guys like you or Saylor or Mallers, the new administration, very pro, Bitcoin. Were you surprised at the SBR, announcement from the working group that, didn't, blow anybody's pants off, that they're not buying Bitcoin, they're not, even, having a structure of saying that, in the future, maybe in 6 months or a year, we're gonna, start this type of strategy? Were you, taken aback a little bit? Because
no, because it's a very shallow glide path for the government to buy Bitcoin, the U.S. government to buy Bitcoin, I believe. What they have to do, see, here's what was your name again? Bill. When he won and people are going to get an SBR, my God honest opinion was, if I were them, it wouldn't be in my top 50 things that I would want to do for this country. I'm an American. I want our country to get better. And when I go through what are the things we can do to get better, buying Bitcoin is not even anywhere close for me as an American. What is close to that top is letting people engage in economic activity that is lawful and produce without getting in their way. So what is the most important thing that the new administration can do? Get out of our way. And the Fed had to roll back, and the SEC had to roll back, and it started long before Trump got elected with that case in October of 23, where Grayscale beat the SEC. That's when, that was the tide turning. And so I'm not really surprised. I do not feel that it's a bad thing for Bitcoin at all. The first day he had an executive order which says people have a right to self-custody and all that, that matters 1,000 times more than buying one single Bitcoin. The government is just a representative of the populace. It doesn't matter. They don't matter. We matter. So we should be able to use Bitcoin in any way. Like BlackRock and Fidelity are using it as an investment product to make a lot of profit. BlackRock is making more off of IBIT. What was the stat? They're making more off of IBIT than their S&P. That was the number, right? More than Q's? That's insane. But that's like peanuts, right? It's just nothing. But it matters because it's people trying to seek a profit from whatever they can do to seek a profit from. That's what capitalism is. And so within reason, people should be allowed to use Bitcoin. And that within reason needs to be basically stripped away so that you can let it grow and then see, okay, one day maybe you need to regulate this or that. That's what governments do. So the government's not a hedge fund, and it's fun to think about the United States owning Bitcoin for potential trade relationships in the future. I think that it needs to one day. It needs to have Bitcoin as a global neutral reserve asset in the event of a monetary reset, right? The dollar system, credit system breaks down and they have to redenominate it in a banking currency, the Bancor. That's a deep cut. So the US government not buying Bitcoin and assembling a strategic Bitcoin reserve in which it accumulates Bitcoin does not concern me, and I think it's not great politics. I would love for the country to improve, and for it to improve, you need good policy and good consensus around that policy. So do the things that will help people in the country, like maybe provide better conditions for companies to hire workers in any industry. That's what matters to me as an American and someone who thinks about policy, not the SPR. It's not that I think it's a bad idea. Just if they have to delay it 5 to 10 years, maybe they'll lose out on something, but will Americans be okay or better off because of the pro-Bitcoin policies that were put in place in 2025? I hope so, I believe so.
Follow up that question. I have another question, but follow up that question is, so U.S. government can buy Bitcoin and pay, when the Bitcoin price rises, they can pay off their debt, right?
Can you say that? Can you say it one more time?
So the primary goal of the government is to pay off their debt. So if they buy the Bitcoin, if Bitcoin price go up, they can be easier to pay off their debt. So
yeah, that's the advertised selling point of the Lummis bill, or one of them. That we can buy Bitcoin and one day we can use it to pay down the debt. I don't know if that's a good idea or that the government should be doing that. It's my answer would be similar to what I told Bill, that it matters the policy. Now, it's hard to craft a bill why you should buy Bitcoin if it's not to do something with it. And so that's one thing that they could say that they could do with it. But I think that Senator Lummis's successes in getting digital currency legislation in front of the entire Congress is a major success. And I wish her the best with future legislation. But I am not personally into the idea of the US government buying Bitcoin to then one day sell it to pay back debt as, again, like a top 50 policy thing that the country should be doing.
Okay, so Bitcoin age, right? Currently, all the assets are priced in dollar. Do you think in the future, maybe in next coming years, the asset will be priced in Bitcoin?
Well, I can already tell you tonight that half of the people will buy these books in Bitcoin, just based on my experience. And that number is, Thomas told me that they do a certain percentage of their transactions in Bitcoin, and that number will probably rise over time. My number will probably rise over time, and that the world's number, which is probably close to 0% at this point in terms of number of transactions in Bitcoin, will gradually go from 0 to 1 to 2 to one day in my mind's eye, we'll be walking through the duty-free shops and you'll have little digital prices in dollars and Bitcoin side by side.
Nice.
And I don't know when.
Okay, so the total amount of asset in the world may be kind of $900 trillion. So in the Bitcoin age, after years, so what's the percentage of the Bitcoin total value you guys would be in that percentage? Like, percentage of all the assets in the world?
There's a $900 trillion total assets. What share do you think Bitcoin would take?
Yeah, I think Bitcoin approaches the gold market cap very easily in the reasonable, maybe 10-year time horizon, 10 to 15 to 20-year time horizon, that Bitcoin easily reaches that level. And then it gets tricky to compare Bitcoin to other asset classes, as really the denominator is dwindling. It's a very hard question to answer looking too much into the future. There was a student, one of my high schoolers, he didn't give one of the greatest presentations, but he said one thing. He goes, I really can't make any prediction longer than 7 years because it doesn't seem right to think past that. And I called him out. I said that was the wisest thing that anybody said today. So trying to predict more than 7 years in the future, it's very, 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 very tough for me to try to predict specific things that far into the future.
Yeah, so in short term, like 2 years, where do you think Bitcoin price will go? Then it's my last one.
YouTube.com/thebitcoinlayer. We talk about it a lot.
I just wanted to clarify a couple things that were talked about earlier. So first, the government report that came out was not about an SBR. So like I know people are upset about that. There's a separate internal report that is required that they don't have to release to us at all, which is they need to tell President Trump how they could acquire additional Bitcoin. He doesn't have to release that to anyone. We don't ever have to find out about what was in that report. They also had a separate report where they need to say how much Bitcoin they have. That was due a while ago. We never heard anything about it. We don't know what happened with all of that. So those were internal reports. They weren't required to be published. This was the digital asset group's position on government's, future digital assets. And then on the IBIT thing, I think it was the second most revenue, but we don't actually know profitability. We don't know how much they're paying Coinbase. And so like that part of like how profitable is it is an unknown. I'm sure it is profitable, but we don't know.
And what's impressive about IBIT is not the revenue or the profit, but the AUM. The fastest to 80 billion, which is the latest benchmark or number that it crossed, the fastest to 80 billion by a span of 3 years or so. An insane rate of growth. And what I will say, Bill, also on the SBR, as I did an episode with Pines. How many are Matt Pines fans here? Pines and I did a great episode. I can't tell you what it's called. Sorry. But we talked. I asked him, I said, why is it strategically important for the U.S. government to buy Bitcoin? And he gave me a 30-minute, brilliant, beyond brilliant answer. And so you should go check that one out because he articulates why a government would need a strategic stockpile of Bitcoin, which makes sense that they don't have to tell anybody. So from when I say I don't think it's what they should be doing, like buying Bitcoin, it's because I'm thinking more about today and maybe politics and everyday Americans and jobs and things like that. But Pines is national security minded individual. I don't have a security background. So I don't think in war strategy. Maybe one day I'll read enough books where I can, but probably not. So I find that angle very interesting, and we'll have Pines back hopefully many times into the future. He's one of the big brains that we bring on TBL. We have two that rhyme, Pines and Dines. Two big brains that we have on.
Hello. You said that your focus is pricing analyst. And so I was just curious if you could talk about your philosophy around how you've been pricing Bitcoin in the past. Mm-hmm. But then now with all these changing elements nonstop, how have you changed your pricing?
So What I mean by price analyst is that I analyze price action, and that is not a predictive process. In that, when I do price analysis, I'm looking at the behavior of buyers and sellers and how they're moving the market, the price up and down through time. But that itself is not a tool to project the price. What it does is it helps me identify the trend and risk management levels, in that if I see a price around a certain level and it holds that level and then breaks out to a certain level, that is bullish and that the trend is with you, so the position is long. So that's what I mean by price analysis. It's not predictive. It's not a predictive exercise. It's a risk management exercise. When I discovered let's just say, when I started to look at Bitcoin price action, what I saw is an asset. This was around when Bitcoin was hovering around $1,000 in 2016. I saw an asset that if it broke out above $1,300, which was the all-time high in 2013, so a 3-year resistance on Bitcoin, that if it had completed this pattern of hitting 1,300, dipping all the way down to somewhere in the 200s by 2015, climbing back up 2016, and then eclipsing the previous all-time high from 3 years, that if it was able to do that, you were looking at potentially the emergence of a new global asset. And so when it did that, my hypothesis was confirmed. Then the next test was after 2017, and then it passed that test also when it broke out. So price analysis is really an analysis of behavior. And if you can identify the behavior, meaning more buyers than sellers, you can identify the trend and write it. So I have my own exercise on predictive pricing. That's part of what I do at my research platform. We're thinking about that a lot. But I mean, that's more of a quantitative exercise. It's not when I say my skill set is price analysis. My skill set is determining whether there are more buyers than sellers or more sellers than buyers. That's behavior. It's human nature. Buy when others are greedy. Sell when others are fearful. Sorry. It's Buffett. It's buy when others are fearful, right? And so that type of behavioral analysis is where I love to live. That doesn't help you predict the future price of Bitcoin. That comes from other quantitative exercises and maybe understanding global macro a little bit too.
Thank you.
We'll do maybe one more.
I had a question about treasuries.
2 more.
I had a question about treasuries.
Yeah, 3.
Were you surprised to see the current administration continue the shortening of the duration of the book? And were you interested to see the former do it and now the current continue it? And without going too far down the path, I want to kind of see why would they do that?
Yeah.
And do you think it has anything to do with the tariff deals? And just putting a thing out there that Manoush in the last was talking about 50 years, 100 years.
Yeah. They asked everybody. I was remotely part of some of those conversations a few years ago. Nobody really wanted 50s or 100s, so I don't really think so. I mean, as far as the street and the and demand.
Well, and the Dixie as well, because if you're bringing $600 million or $1 billion from Japan to here, you wouldn't mind if the American dollar was marginally undervalued, and then in the future goes up.
Sure. So this is a question. Your first question was something that my own analyst has been asking me all year. He said, "Why don't they term it out? Why would you?" I just did a chart of bills as a percentage of total debt outstanding, and it's not even close to the equilibrium levels prior to the great financial crisis, which were at around 25 to 30, and we're at 22 today. If you're trying to protect your debt market, why would you issue more debt? So yes, it's a risk to shorten the debt maturity, but that's thinking like a non-global reserve currency. That's more of a emerging market phenomenon that you shorten the debt, you have more of a rollover, and it's a risk. It's not a risk for the U.S. to roll bills. Well, it's just not a risk. The government doesn't have, if they take it to 30%, it's not a risk. Rates might rise, and that will be the proof that it is a risk, but they just said we're not issuing more, and rates have gone down. So it's not a concern to me. It's absolutely what I would expect, and I was expecting them to say, actually, we don't have any plans for the next couple years, which is what they said last week. So they even pushed it back, and let's just say I loved that for the Treasury Department. I think that that's the right decision, and I have no problem with more bills. You have one more question? No.
Will we have another Bitcoin winter?
That's the question I answered with Danny Knowles a couple weeks ago. We did a long episode on that. I think that eventually, yes. But I think that this one will be pushed back. Because what I see, this is the insider baseball guy of me that's looking at price analysis, actually watching the price action. I feel like Saylor is manipulating the market sideways and not allowing it to escape. He's the biggest player. So I really think he himself is managing the escape velocity downward to prevent the next winter from arriving sooner. That's a big working thesis of mine at the moment. But it's a working thesis, and I'm like 60-40 on it.
I'll listen to the pod.
Yeah. Yes. Okay, sorry.
A quick question. What's your view of the future of Bitcoin in the setting of centralization of mining?
The centralization of money or decentralization of money?
Bitcoin mining.
Bitcoin mining, sorry. I think Bitcoin mining as a fixture industry of this world is just getting started. I think it's the most important thing. It secures the network, and it's the basis for the economics of the network. And I can't even imagine where Bitcoin mining is going to go. I know I'm not answering your question, but I think the Bitcoin mining is in its infancy. It could change the entire world of energy. We could see 1,000 nuclear power plants in the next 20 years because of Bitcoin mining. Like, that's the main driver, and changes the energy consumption and production patterns of the entire planet. That's how important Bitcoin mining is. It's like almost the most important thing. I think about it a lot, yeah.
How do nation state level buyers price in risk of quantum, and I'm talking about at signature layer and not at SHA-256, when that risk is, the reason for that risk is exactly the reason for why Bitcoin is successful, which is that you don't have a defined governed path which can ever change it, and hence so obscure that it's incorruptible. The question is not that whether it will happen or not, but you have to price that risk, and it's a circular method.
I can't answer that question other than looking at the price. It doesn't show that that is a concern. Last question. Oh, okay.
Sorry, that's
It's
a little
okay.
bit behind because there was a line, but you were talking about the analysis of the Bitcoin price in 2016 when it went up and then it went down almost to nowhere or like 200. But many other currencies, not currencies, digital coins followed the same pattern. For example, Ethereum. And yet you're saying, no, Bitcoin is the one, everything else is not the one. Does it have anything to do with, like, you know, the social platform is like where everybody goes, the rest has to go because there's nobody else everywhere else. But they do change over time. Like Facebook was the thing, and now nobody's on Facebook, and nobody's on Instagram anymore, and everyone's on TikTok or whatever's next and might be behind.
The price patterns of alternative cryptocurrencies all actually follow the same pattern. It's called insiders always dump. So you see the pairs versus Bitcoin in a pump and then a dump. And Ethereum is still in the dump. So until it can prove that it actually can rise against Bitcoin, then that's the market telling you which network is being chosen. So Ethereum, the ETH/BTC pair reached spot 1.5, so 0.15 in 2017. It then peaked at about 0.09 a few years later. It then peaked at 0.05 last year and continues to make lower highs. That's the relationship between the two. Yeah, that's how to measure it. You get the last one, because I gotta do the books also.
So who wants their book signed?
Yes, if you have your own book, I'm more than happy to sign it, of course. Thank you guys. Oh, yeah, go ahead.
I'll also ask kind of a left field question, kind of with Ethereum. How do you feel? Let's go NFTs. Are you believer, hater? Just curious, kind of your thoughts when it comes to them.
I always base my analysis in the market. So you have to measure longevity of anything. So your question is probably best answered by, of the NFTs that have been released or have gained popularity, how many of them have sustained value, you know, gently increased in value? Are you pricing in Bitcoin? Are you pricing in dollars? So I don't really know the answer to any of those questions, but it's outside of my field of study. But I respect the market, and the market tells you really everything you need to know. Thank you guys so much. I really appreciate you guys. So as I mentioned, I have 30-something books left here for sale. Layered Money is 30 and Bitcoin Age is 35, and that's the sign price. And if you have your own book, of course, I'm happy to sign it. Thank you guys for coming. Really, thank you.